Welcome back to the PRIMETIME Podcast with our esteemed hosts, Ozzy Moreno, George Acosta, Charlie Suarez, and myself, Marcos Cabral. Thank you, Charlie, for waking up from your nap in order to join us on this.
My pleasure.
I am very excited that you decided to show up today.
I'm glad I was able to make it.
Yes.
When you guys do it this late, this is my nap time.
It's your nap time.
I'm
My
glad I was able to
apologies.
stay up.
Next time we need to do it in the morning.
In the morning.
When he's fresh.
That's correct.
He's fresh and just answered a few calls, not too much. But after you get 6 calls in him, he needs a nap. He needs to, regenerate.
That's right.
And, man. So what's going on in this world of beautiful world of mortgages? Rising interest rates, low inventory. How are we doing out there, guys? What do you guys, what are we seeing out there?
Not much. If you look at the stats, not much. Production is down.
Speaking to the mic, buddy. Say that one more time
I
again?
said not much. Production is down. But, on the good
Industry-wide.
Industry-wide. On the good side, have you guys checked out George's little jacket he has on today?
Oh, God.
Looking sharp, huh?
It's the focal point. It's the focal point.
I'm gonna go ahead and get a second note on the jacket. That's a fresh jacket.
Yeah.
That's a
fresh look. I like it. His 2022 look has improved tremendously.
Yeah, but it has to do with the fitness game because I think he's back in the gym.
Oh, that's back in the gym. Congratulations.
2 whole days in the gym so far.
Yeah.
2 whole days.
Yeah, I noticed.
New year, new me.
And no, you can't even call it that anymore. So good stuff. You can't even say it was a New Year's resolution because you kind of started 3 weeks after it. So it's a real deal. It's the real deal.
I think it's
the real
like,
McCoy.
Yeah, it's like the rates. They changed and so did he.
So you guys
I love it.
Going with the rates. You saw that
The Fed
announcement yesterday, 1/4 point before the end of March. They think maybe even quicker than the end of March. So
how many times do you think they're going to do it this year?
They're talking about probably 6 or 7 times, believe it or not. He said yesterday that first, the chain of all the products out there, nothing's going to improve until June or July. And secondly, they haven't even really talked about the inflation going on. So he's talking about maybe 6 or 7 increases this year.
So if you're waiting to buy a property, I suggest you no longer wait.
Don't wait.
Call Ozzy Moreno today.
Yeah, there you go. Yeah, because a lot of people have a preconceived notion. No, I'm going to wait until the market collapses and this and that. But
prices are going down.
Prices are going. But if interest rates go up, what are you going to do, right?
I know. That's what everybody was hoping for. Oh, interest rate goes up, prices go down.
So no more 3s or hello 4s.
3s. No, 3s.
Threes.
3 stays
What's
in 20. That stayed with 2021, buddy. That's in the past.
That doesn't exist
anymore.
anymore.
And hurry up because we might see 5.
Yeah, 5
4s and hurry up.
And we might be knocking
Don't
on the
wait.
door on 6 soon. Listen, guys, barrel of gas hit 105 today.
Oh, wow.
Okay, I filled up in Costco last
Let's
weekend.
not even talk about that.
$2.99. Today I filled up this morning, $3.19, 20 cents in 7 days, and that's the cheapest gas out there. So
And
it's going to be
it's
tough.
more expensive in other parts of the country.
Oh yeah. Well,
It's a
we
lot more
remember.
expensive. And supposedly they're estimating that the national average by the summer will hit $4.15.
Yes, it would be. They're estimating the barrel to go up to $150.
Wow.
Which we never seen before. But you know what? It's all good, man.
You think so?
Is that why Tesla's stock just keeps going?
Let's not talk about that. I mean, they just reported their best quarter ever, and the stocks went
And
down.
what did it do?
I don't know. It's like $34, $35 down today. It's mind-boggling. Mind-boggling.
But I guess
nothing's making any sense anymore.
But you know what? I remember back when I started doing mortgages back in about 2002. I think the best rates out there were 7%. And if you had great credit, you would get a 6.875, and they had the expanded level approval 1 and 2 and this and that. I was selling 6.5s. I think people just have to go back, to the core of actually doing what we're supposed to do, which is selling the payment, not the interest rate.
You're absolutely correct. But,
Right?
the national average is between 6 and 7%. That's correct. But the difference is when it was 6 and 7%, the price of the houses was $185,000. So when you have a house now going for $450,000 at 6 and 7%, the average Joe won't be able to qualify. Because you got to look at, the DTI. So I think, guys, I don't know, but maybe I'm wrong. I think FHA will be coming back soon to a theater near you. If you ask me, with the interest rates going up.
Correct. But I don't think I think course correction was necessary. But I think it's not really going to stop the purchases, because I think it's something that it's first necessity, and people are still going to do it.
Well, if we're talking about maintaining values, I think the fact that there's such an inventory issue that's going to maintain values, regardless of rates going up. I think it's going to maintain values because you have such demand and low supply on the inventory side. Now, will people be willing to sell their current existing homes to? Because I mean, you look at a situation where you're like, well, if I sell this, where do I move? Because everything's just that much more expensive. I think
and they're going from a 3.5 to a whatever
4.5, 5.
4.5, 5, exactly.
I don't know. I think that, like I said, I think I mentioned this in the last podcast. I think that the biggest amount of transactions we're going to see this year are a race for capital, debt consolidations, and cash out refinances for people who have obtained that much equity in their homes in the last couple of years.
And I mean, U.S. homeowners are currently sitting on about what, $9 trillion in
An
equity.
average of 157,000.
$9 trillion in equity. So
They put out
I think that consolidation will be a big thing.
they put out a stat yesterday that says average is 157,000 per home.
Yep.
That's it.
That's it. 157,000 per home. It's what the equity they're sitting on right now.
Yeah, I think everybody who sat on the sidelines waiting for the rate and term refinances are going to come to a realization that obviously their 3.875 is actually very attractive. And the issue is going to be, are they going to be able to refinance into a higher rate to consolidate their debt? Because I imagine with inflation going up and the prices going up, obviously wages are not going to keep up with that. And I think people are going to be left month in, month out with less money in their bank account. And that's where we come in and apply, what we do, which is help increase cash flow and lower those obligations.
And you know what? I mean, talking about everything else, yes, inflation is hitting everything, but let's say, for example, what about these rents? The rents right now were crazy. Like the rents, like before, you would think about an investment property, you didn't want to be upside down, but right now these rents are so crazy. Right now, like you could even make some profit, like even after you buy someone. But I know that obviously there's going to be a couple of changes with that. I know there's a couple of regulations coming out that they want to go ahead and impose additional fees for second home and investments.
I guess the biggest question would be, are we headed in 2023 into a recession? Chuck?
That's I would say 100%.
100%.
100%.
Wow.
If you look at all,
100%.
if you look at all the
at least say
indicators-
99.
Can you like
no, 100%.
100%.
Chuck, say
I'm
99.
like Marcos Cabral. When I say something, I'm never wrong.
Oh.
So I would say 100%.
Chuck. Let's just say 99. Just so,
Okay, 99.999.
no 0.9. Let's just 99 it right
Okay,
now.
99.
Look, so they did say that we are staring down the barrel of a recession in the first quarter of 23.
Correct.
I mean, there are a lot of rumors about that. Everything's kind of signaling towards it, which is going to be, I don't know. It can go either way. There's a lot going on right now.
So you're saying, housing is one of the last legs standing, because we see the stock market crashing, every day right now.
Which makes no sense. If you have increasing rates, your stock market should be stronger than ever.
Correct.
Because people stop buying homes into the stock market and vice versa. So it doesn't make sense when you have the stock market start, with 1,001 point this week, or was it last week? It opened up losing, and then it ended up 99 point something positive. That makes no sense. There's no trend in the stock market. I can guarantee these guys are saying, "What the heck is going on?" It's an up and down. Now we got the situation with Russia and the war. You think that's going to help out? No. Okay, you got inflation every day higher and higher. Okay, the only positive thing we have going on is we have the Super Bowl coming in a couple of weeks.
That's the only positive thing
wow.
we have in the nation.
That's the only thing we have positive in the nation.
What a gloom and doom kind of
and
man.
I also see, the only thing I guess.
That's after a good nap.
If
He woke up upset today.
And Ozzy actually did
angry.
his first broker out loan. So
No, not
non-QM.
brokered out, non-QM.
No,
he
non-QM,
just
I'm sorry,
just submitted
non-QM.
his first non-QM, which,
Non-QM.
by the way, is becoming a very popular product right now.
you can ask
well, it's going to
George.
become. So that's the question. I
It's
guess
gearing
Is it gonna
towards
be
that way. It's going
that
from
much
the
more aggressive because people don't qualify full doc with the rising rates and prices are they at. How
Well,
aggressive?
hold on, let's pause.
is
It
non-QM
goes
gonna
back to what Ozzy just spoke about, right? Where you were saying second homes and investments are not going to have an additional hit for purchasing second home and investment homes, which doesn't apply to a DSCR loan and the non-QM. So yeah, it's gonna be a more of a popular product now.
Yeah, because if everything does go up, I mean, I've been doing this when I remember there was stated. Remember stated?
We're headed
Stated
there.
income. We're headed there again. And it's kind of like when I was
Sivas and
inputting the loan, I'm like, so no income? George, are you sure?
Yeah.
Like
No
I couldn't
employment
believe it.
info? Just
Nothing,
nothing?
and we're just going to
Appraisal.
approve it. Are you sure?
So wait, walk us through your first non-QM. What product was it, and what was the process of putting it together?
Okay, so mine was a DSCR loan, an investor type loan, and one of the most interesting things was what I just talked about a little bit ago. Like the rent is actually covering the mortgage payment, because not only are these things flexible, they got a 30-year, they got a 40-year, and if that's not enough, we even got an interest only. So that's one of the positive things about working here, for example, in this particular office, in this branch per se, because we're adapting to these market changes, because we anticipate what's happening, and instead of freaking out and just maybe not giving wrong information, or just, the difference between somebody purchasing or renting is really who they're sitting down in front of. And I think, the fact that we are doing some of these, exceptional non-QM stuff, I think I put the first one in, and I, from theory to practice, it might be a long step, but I got my first loan in already.
How easy was it to put it together?
It was too easy. That's why I had to double check with George, because there was no income.
They gave you a flashback.
Yeah, I was
of
like,
the early 2000s?
I was like, are we doing this again?
I remember this.
We're really doing this again.
If you guys don't know, George is like the product guru here for Doral. If he doesn't know it, trust me, nobody knows. So, 1-800-GEORGE for any questions on product wise. Don't forget 100-GEORGE.
I mean, we do have an exceptional product team at PRMG. Laura Roche does an excellent job rolling those out, so she makes it very easy for the local managers to kind of learn the nuances of the new products, right? What I'm seeing, though, is that those products are getting very, very aggressive. And obviously, it helps us provide liquidity and provide financial solutions to where borrowers are not normally going to qualify, especially this year with rising rates. I think that people just, if they gather the 10% down payment, they can get a loan. There's so many ways to qualify a borrower through that non-QM space now that I think it's going to be the life raft for 2022 for a lot of transactions. And, other than that, it's going to be, like I said, it's going to be a big toss-up between the non-QM space and the debt consolidation space on the conventional side. I don't see a lot of regular purchase transactions. The same volume that we saw last year, I don't see it, in my eyes, I don't see it this year, unless it's in the non-QM space.
And let me ask you a question. What do you guys think about the appraised property value? You think values are going to keep on continuing to rise?
I think if rates keep rising, I think there'll be a little bit of a slowdown on home appreciation, but
Not on the high-end properties.
Not on the high-end properties, but also we still have an inventory issue.
Yeah.
So people are still extremely aggressive. I spoke to someone today. It was a loan officer I spoke to. He wasn't even from Florida. I don't know what state it was. I forgot now. But I was talking to him, and he says that he was talking to one of his agents this morning, right? And his agent had listed a property, and within 3 days or 4 days, something like that, 160 showings, one property. Listed it at 1.1 million. It ended up going under contract for 1.4.
Wow.
160 showings. Wow. Within like a week. I mean, call it a week. That's insane. I mean, that to me is just, it kind of shows where we're at in the country when it comes to inventory. Mm. And I think the inventory issues are here. They're here to stay for a while, because regardless, people need a place to live.
Especially in Florida.
Especially in Florida. But listen, besides Florida, it's throughout the nation. Because the last 2 weeks, I've been talking to a lot of different loan officers in different states, and everyone's going through the same thing. It's the same challenges.
Yeah,
so,
the reason I say Florida's very friendly, obviously, when it comes to the whole state tax. You don't have those taxes that some of these other states have.
well, yeah, there's a lot of people flocking over here now.
And let's call it what it is. The COVID restrictions in some of these states is out of control, and there's causing a lot of people to just say, let's uproot and move our life somewhere to a little bit.
They're chasing DeSantis, is what they're doing. We're gonna create a documentary. Chasing DeSantis
and running from Como.
And you know what else? Because I mean, if you think about it, I mean, there's people that have the liquidity. They have it. And if it's not in crypto and if it's not in stocks and bonds, it has to be in home ownership. The thing is that you don't see any non-QM stuff to purchase stocks or anything like that.
There's a lot of cash out there. I mean, there's 20-year-olds making millions off selling teddy bear JPEGs. So it's insane out there.
I saw something the other day. It was
NFTs.
there was an 8-year-old YouTuber talking about his toys made like by 1 point something.
There's a lot of cash out there. I don't know what's going on. This is very confusing. There's a lot going on. There's a lot going on. But now that since you touched on it, Chuck, our resident political spokesperson.
Yes, sir.
You mentioned Russia earlier, the Russia-Ukraine fiasco. There's a little bit going on in North Korea also. I mean, what's your take on all that?
It's hard to say. I can tell you what's going to happen. I think the U.S. is going to have a rude awakening when it comes to a lot of these countries out there, because when we stop being energy independent, and a lot of these countries who actually buy oil from us now are buying from China, buying from Russia. Germany is a perfect example. They ask all these countries to donate and send something in for the war to participate. Some of them are sending weapons, some are sending rockets. Germany sent, I think it was 4,000 or 5,000 helmets, because they're buying 90% of their oil right now from Russia. Yeah. Wow. So, Russia controls it. We did approve that pipeline through Germany. So right now it's a bad situation to be in. So it's a very divided circumstances going on over there when it comes out. They presented a letter. They presented what they wanted Russia to do, and yesterday, Russia pretty much just laughed at it. And what they're trying to do is just take over, Ukraine, like they did with Crimea, a couple of years ago. And we're back to the situation. The difference is that you got a bully here with a small little town. Come on.
And what did he say? What is it, about 8,500 troops or something?
What he wants is he doesn't want them to be part of the, of the union, and he wants them to be separate. And if they do, he's going to go over and just take it over. Just come in like they did with the other one and take it over. But it's funny where these guys are going to resist them 100%. They had showings of the independent owners of companies, their small businesses, of actually training to fight. The regular public, for training to fight. It's a bad situation to be in, and economically, right now, the situation we're in. If you look, what's his name? The guy from North Korea. He shot 2 more rockets last night. Okay?
He's having a fireworks show.
He's having a fireworks show.
It's the 4th of July every day.
Remember, that's the guy that doesn't poop. Okay? That's the guy that doesn't poop. He shut down 2 more rockets yesterday. It's becoming a joke. And as this goes on, everybody's seeing it. China, before you know it, China will be taking over Taiwan. And it's just...
So there was an accident today or yesterday. A Navy fighter. You guys saw that? The F-35?
I heard that.
Okay. Tried to land. Something happened. Boom. Landed in the ocean.
In the ocean, yeah.
Sunk, right? But there's some technology on that plane that we've invested, I don't know, billions of dollars for, right? So now the race is on because we have to find that plane before the Chinese do.
Exactly.
Right? So the race is on, and they're literally out there. Chinese are waiting like this. They're looking from afar, trying to jump in.
They're probably racing submarines.
It's racing submarines, trying to get the plane.
Wow.
Right?
Well, that's like
it's
the G5. What's happening with the rollout of the 5G right now in the airports?
Yeah.
And it's not the new planes. It's actually the planes that are 20 and 30 years old who have an issue. So the rollout around the airport, everything has stopped.
Yeah. Interesting times.
Interesting times.
That's
why I tell you, any of you there who want to come into the mortgage business, this is your time. This is your time to come into the mortgage business so that you can learn a lot about everything else happening in the world. Forget about the interest rates rising. We'll have a good time while you're here anyway. So
interest rates were always... Listen, when I got into the mortgage industry, I was selling 12s. So we're still good.
And he's talking about interest rate, not shoe size.
I'm glad you actually clarified that, just in case. So yeah, I mean, in the 80s, interest rates were 18%. So let's not think about rate, like you said. Let's think about payments, think about benefit. Where are you going to be? going forward versus where you're at now. That's really the point, right? So with that, we'll end it, guys. Thank you very much. What?
Before we go.
Go.
Super Bowl pick.
I'm
I'm taking the LA Rams.
going. I mean, that's a good pick. It'll probably be KC and LA. But if it's KC and LA, I think KC takes it.
Same, yeah.
Yeah,
KC for you?
I think KC.
How about the surprise?
If the Bengals
Cincinnati?
if the Bengals come out and surprise everyone,
just like
it'll probably be the Bengals and LA. LA may take it, but we should be rooting for the Bengals. So good job for them. They did amazing in the last game. So
Yes, they did.
yeah.
And with that note, PRMG also did amazing. Also with these interest rate hikes, I mean, we've got solutions. We got people calling us. I got people calling me from other companies, finding out what I'm doing. What are we doing? What are you guys doing there? And we're just getting information. We're just making it. We're just making it live. We're making it available,
Yeah.
and people feel confident when you can give them an answer, not direct them to CNN or watch the news. No, man, we got access to MBS Highway. We got access to George, and that's it.
The guru.
And
And,
Fox
also,
News.
Sue, when they say, what are you doing? You tell them $16.6 billion. That's what we did last year.
Wow.
2021.
I got to say that with confidence.
All
I
right?
remember that number.
$16.6 billion.
And say it with your chest.
And then
There you go. Pretty proud.
14.2 billion was Marcos Cabral.
Well, thank you, everyone. Thank you for tuning in. Until next time, the Primetime Podcast. Later.
this.